Do you hate the thought of working past 55 or 60? Do you hate not being able to live the life you deserve today? Do you hate not knowing what your financial future looks like? It's time to stop doing what you hate. Here's your host, Mr. Harold Green.
Hello, everybody. This is Harold Green of Bright Tree Wealth Management, and it is time to stop doing what you hate. Welcome back to Financial Advice versus Financial Propaganda. Now, if you're here for episode number 2, you already know most financial advice out there isn't advice at all. It's marketing with a tie on. And today we're going to be diving into the financial media machine, TV, online news, headlines and commentary, and how it suddenly and not so suddenly shapes the way you think about money. Now, here's the big idea for this episode. The financial media isn't designed to make you a better investor. It's designed to keep you watching. And once you understand that, everything else is going to start to make some sense. And so, are you ready? 1, 2, 3, let's get it. Now, the first thing we're going to talk about is the incentive model of the financial media. Like, what drives them? In financial news, they have like one job, and that job is to capture your attention. It's like to get your eyeballs. Like, I remember when our kids were, they were in 8th grade and they were doing music in middle school, and the band director, his name is Mr. Fanning. And in order to get their attention, Mr. Fanning will yell, "Give me your eyeballs!" Like, he would say it really loud. And he's this really short guy, like all of 5 foot something, 5'3", 5'4", and he's really short, maybe a little bit taller than that. But he was magnificent in getting their attention, and that was pretty cool. But in the financial media, attention in the financial media is built on like 2 emotions. The first one is fear, and then the next one is excitement. And you're going to always see those 2 in tandem, right? They tag team every single time. Like when they can't get you on the excitement, they get you on the fear. When they can't get you on the fear, they try to get you on the excitement. But anything like calm, balanced, long-term, or nuance, like subtle stuff, it doesn't tell. It doesn't get clicks. It doesn't go viral. That's why you never see headlines like markets move sideways, which is totally normal. Long-term, like investing, still works. And diversification prevents panic selling. Instead, you see stuff like markets in turmoil, like stocks plunge. Is this it? Is this the big one? Billionaire warns, buyers beware. Like drama equals eyeballs. Like eyeballs equal ratings. Like ratings equal money. And honestly, it's like, I have a problem with this. Is it evil or is it not evil? Or is it just incentives, right? And the next thing we're going to look at is how show producers build like financial narratives, like how they write these scripts. And here's something most people don't know. The people deciding what you hear on financial TV they're not economists or analysts. They're producers. That's the key. And you'll like when you watch it, sometimes they'll say, well, our producer said this, our producer said that. Producers, they choose segments based on like what's trending, what spikes audience retention, like what creates emotion, what creates debate, what keeps viewers from changing the channel, like what will make you sit there and like almost pee on yourself because it's so good. And this is why financial TV often feels like sports commentary. You guys ever notice that? Like it does. You got the Bulls versus the Bears and stuff like that. Those are 2 different sports, but still though, you got confidence versus like skepticism. You got like the optimist versus the pessimist. Like they'll have both of these guys on the show, one saying one thing, one saying the other thing, like duking it out. And you're sitting there like, yeah, you're right. No, you're wrong. No, yeah. It's compelling. It's addictive. But is it good investing advice? Like not even close. What the producers want, they want personalities who deliver predictable value. Those things like the perma bull, like perma bear, the Fed whisperer, the tech guru, the recession predictor guy. Like we got all these guys lined up on the show. And these characters, they create storylines, not insight. Now, sometimes, don't get me wrong, sometimes they say some pretty cool things. And I watch a lot of this stuff. And that's where I'm kind of getting this from. Well, a lot of it anyway. Financial media is not a classroom. It's a performance. And You heard the word being thrown around now? It's like it's all performative. It's all a show. In order to get people's attention, you got to put on a show, not like deliver real results. And this is why my clients sometimes they get so about it. Like they get so about it. Like I heard this, I heard that. These guys said this. They said, like, why are you telling me? Like somebody, you're telling me it's like you went to a movie and you watched a movie and you put on a show. Like that's basically what happened. Is anything real that they're saying? Most of the time it's not. It's just to kind of like get you hooked in. And a lot of times, I want to share this with you, like why the expert guests aren't what you think. Okay. Now, this all depends on where you're getting your information. There's some good ones out there, and there's like some really bad ones. And I want to talk about the guest on the financial TV, like the analyst, the strategist, the portfolio managers, and the economist. A lot of these people are all doing what they call like talking their book. They're all talking their book. If you're a bear guy, you're talking about why you're shorting stocks. If you're a bull guy, you're talking about why we're in like the best time ever to invest. If you're a portfolio manager, you're like trying to like get eyeballs to come look at your stuff. And most people think they're on TV, they must be really good. But the real selection criteria is usually, are they good TV? You know, Go check out their stuff. And one time I saw this thing and I was like, okay, let me go check out this company and let me go check them out and see, what they're all about and see, their investment in people too. I want to go see what they got. As soon as I got to the website, I wanted to put in $100,000 just looking at the site. I'm like, this is really cool. They got me right here on the first page of the screen. Like, yo, I don't even have to go any further. I'm going to give these guys my money. I look at the track record. Like the last 10 years, they only made like 5% in their top fund that people are piling into. I'm like, why are they giving these guys billions of dollars and I can't even get 50 cents? Like in my portfolio, I'm just kidding. But it's just like that. But you got to say, are these guys good for TV? And the producers, they want simplicity. They want confidence. They want polarizing opinions. They want memorable sound bites. And what they don't want is they don't want the stuff that like I'm going to tell you when you sit down with me. They don't want nuance. They don't want context. They don't want, well, it depends. They don't want 10-minute explanations. They want it quick and dirty. They don't want somebody like admitting uncertainty. And these are all the things like when you go see the doctor, and a lot of times they're going to tell you, they're going to give you very, very simple stuff. They're going to try to break it down to you. And you say, well, if I do this, they're going to say, well, all it depends. And sometimes they have to explain things further out. It just all depends. And this is what they don't want. But investors, real investors, they want clarity. They don't want TV characters and they don't want actors, but the TV, they want characters. They want people to play a narrative and play a show and to play a role. That's why you hear like price targets like S&P 10,000 incoming, Bitcoin to 1 million, housing crash of 40% is inevitable. Like these are all things that like they grab you and they scare you. They make you move. Are those analysts brilliant? Not necessarily. They're just great television. They're just like great television. And here's how the financial media distorts your perception. There are three major distortions. Like you need to know this. Number one is like frequency distortion. Markets move every second. Your life, it doesn't. Okay, that's number one. But financial TV, they make everything feel urgent. Every tick feels like urgent, like scale distortion. A 1% intraday drop is normal. But a red chart and dramatic music make it feel like catastrophic. It's just like that. And next one is like narrative distortion. Financial outcomes, they rarely have one cause. You can go do chat GPT this stuff yourself and say, what happened today with one particular thing or the other. And the media may tell you is one thing. They'll say, hey, it's one reason. The Fed did it. It's all the Fed's fault. And they'll say, tech earnings caused this, or oil prices triggered the crash, or the AI bubble, it's all, the AI bubble is coming. Investing isn't simple. Media needs it to be simple. And the Bible talks about simple-minded people. If you're simple-minded, I'm telling you, they got you all day. And I'm going to talk about some case studies of media propaganda, right? Now, example number one, headline says markets in turmoil specials. Every time the market drops 2 to 3% in a day, certain networks, they roll out the dramatic music and the scary graphics, especially if they're trying to like make you hate the person in power at that time and they want to blame it on this guy. Why? These specials, they generate some of the highest ratings of the year. I'm going to tell you, financial derangement syndrome is real. Some of these people are just like They make you crazy. But the long-term effect, they condition viewers to respond emotionally to normal volatility. Like, man, this stuff is normal. Like I tell my clients all the time, I'm flying the plane. Turbulence is normal. Very rarely do you get in a plane and you don't hit some bumps. Like that's normal. But the media, they make you feel like the first bump you hit, like the plane is going down. Like, come on, man, for real? Again, they condition viewers to respond emotionally to normal volatility, and the media wins and the investors lose. That's why a lot of people don't make money in the stock market. They got it all twisted. And the next thing I'm looking at is like over coverage of billionaires. This is another way they distort it with headlines like billionaire says the market is going to crash, or this billionaire is shorting Nvidia. Then I get people calling me saying, hey, should I be selling Nvidia? Like this guy says it. Billionaire predicts 2025 will be the best year ever. Now, sometimes they can be right, and sometimes they're not right. Even a broken clock is right twice a day, as they say. And then why do networks love billionaires? Because they make what they call great thumbnails. Like you can click on them, but being rich doesn't automatically make someone a good forecaster. That's not the case. Their incentives and their portfolios are nothing like the average investors. These things are complicated. You can't even model one of their portfolios because you don't even qualify to buy some of the stuff that they have access to. It's just not fair. The next thing they do is they cherry pick data stories. Like they can skew data. You'll see headlines like inflation soars, but buried in the article, it rose 0.1%. Like, come on, man. This is the stuff I deal with every day. And it just makes me like, I'm used to it. I'm numb. Or they'll say layoffs surge, but buried in the data, the layoffs are still below historical averages. And it's selective emphasis. It's what they call narrative construction. Like they're trying to build a case for why you should stay glued to the TV and not make sure you're making sound decisions. And then you need to learn and understand how to decode financial media like a pro. Like you got to be able to see right through this stuff. And here's your cheat sheet for cutting through media noise. Number one, you got to ignore adjectives like sharp drop, soaring prices, plummeting stocks. Like look for actual numbers. And that's when I put out the market minute for my clients. We go through things like fundamental analysis like, free cash flow up, earnings before taxes and depreciation up, return on investment, like return on, I forgot that word, but it's just return on capital spent, like up, long-term debt down. Like we look at that stuff and I show them like, why are they selling Microsoft like it's, recalled meat or something? It's like, why are you doing this? Again, this is why. You got to identify the narrative frame. Is this fear-based, hope-based, celebrity-based, click-based? Like, what is this? And then number three, you got to tune out predictions. Like predictions they're entertainment. And it's all it is. Like, who do you want to win the Super Bowl? You want the Bears? You want the Patriots this year? Who y'all got? You got the Packers, you got the Dolphins. I don't think the Dolphins are going to win, but it's predictions are entertainment. Financial predictions are entertainment. Data is information. And number four, follow the incentives, right? Networks want attention. Attention is emotional, and emotional sells stories. Emotional stories, they sell. And then number five, you got to ask, like, how does this affect my actual plan? Most of the time, the answer is it doesn't. It don't even matter. I know I should have said it doesn't matter at all, but it don't even matter. It just don't. And so I want to thank you for listening to this episode, like number 2 of financial advice versus financial propaganda. And today I hope you learn like how financial media creates like narratives. They amplify emotions and they influence your perception of risk, all because of their incentives for ratings. And the next time we're going to be tackling an even bigger beast, and it's social media money gurus, and it's the wild west of financial misinformation. But honestly, if you want somebody on your team that does this for you on a day in and day out basis, so you ain't got to worry about this stuff, like you call me, I'm going to tell you where you get that from. Well, I heard on TV, turn it off. Turn off that show. Like, why are you watching that? You want to be entertained. That's what it is. And your entertainment is hurting you. It's like going out and drinking all night because you like to do that. But the next day, you ain't crap at work. You're like, your entertainment is killing you in some cases. And to avoid that, you must have a plan, a well-balanced, comprehensive plan. And you must be investing according to things like risk tolerance, time horizons. Understand this stuff and do your due diligence. And I think we can help you with that. So hit me up on the website. or give Beverly a call at the office, 808-521-4401. Get you on the schedule, but our minimum is $500,000. And if you don't have that, well, maybe we can still talk and I can tell you how you can go and start the process with less than that. But you gotta have the right team on your side. So I'll see you in episode number 3. And until next time, everybody, 1, 2, 3, let's get it.
This is thepodcastfactory.com.